Vikram and I have spoken before a few times, including at Fund Forum last year, and I think we share some common interests and challenges. And you and I have spoken about how the different stakeholders, when you're trying to engage compliance as a service offerings, managing those stakeholders is a significant challenge. And you certainly shared with me some interesting insights, and I thought maybe if we kicked off today and you shared some of those challenges that you've had as you've dealt with some of these transformations that are ongoing in HSBC.
Thanks, Ronan. And I think this is very, very topical. And before we sort of dive into some of the specifics around also what we are doing and thinking about HSBC asset management, I just thought I'll give a little bit of context as to what we are in HSBC asset management. Because sometimes I think the asset management business gets lost within the very large group that we are in HSBC. So we are about a $500 billion asset management business. We operate in about 26 countries across the world, in practically every continent. And we are a full-service asset manager across various asset classes, including alternatives and long-only and passives as well. So it's a pretty broad spectrum of regulators that we deal with, of regulatory requirements that we deal with. And of course, the compliance challenges in a business that spans all of these markets and asset classes can be quite significant. And when we think about compliance as a service, and when we think about what this could mean, I think there's a very fundamental question really, which is what is the need or what is the business outcome that we are looking to address here? And I think that flows into then the sort of specific perspectives of different stakeholders, both in the business and externally that we engage with. And in some ways, that outcome or that business need is being driven also by what is happening in the business. And our situation is not in that sense unique. I think everybody would appreciate, as an industry, asset management is facing a number of, I would say, challenges and complexities, whether it is in terms of the fact that there is increasing regulation, and yes, we could argue the pace has slowed, but it has not gone away. Or whether it is the challenge that we face with respect to requirements or different types of requirements coming through from clients as they grapple with their own regulatory challenges. And a good example of that is the insurance sector, which asset managers service. And a third sort of aspect there is the declining margins in the industry and the challenges and pressures that imposes in terms of how an organization seeks to address and react to the various outcomes that it is looking to deliver. I think all of these sort of come together in terms of expectations of stakeholders and how people look at compliance as a service. One of the key elements really that people are thinking about is that a regulator is a key stakeholder. So how do we ensure regulatory conformance? I think the penalties are becoming even more severe today than they were in terms of any regulatory non-conformance. So that is a very, very important aspect. And the other one is, how can I do that in a way that doesn't compromise either my delivery to the client or the cost structure with which we need to operate? I think there are some very fundamental questions that come through when we think about compliance as a service, looking at all of these various aspects. And I'm sure as the panel we'll run through many of these sort of questions or challenges. And I think the colleagues on the panel here, they will bring a sort of different perspective, hopefully. But really, these are the sort of big questions that as an asset manager, we are looking to address when we think about compliance as a service.
I guess sometimes it boils down to how does one even choose the right model? So we see there are different types of service out there as well. I would describe them maybe as utilitarian services or utilities. So in the same way I plug my electric socket into the wall and electricity flows, it's highly standardized. That would be the utility type service. So you take it as it is. And then we have this kind of growing cohort of managed services where it's very the service provider is dealing with all of the nuances of the firms. And I think that introduces, the managed service aspect introduces many challenges. Pauline, risk oversight in that world is very different. So engaging with a utility, engaging with a managed service provider has a different risk profile. Yeah.
So good morning, I'm Pauline Bunyan. So absolutely, and the FCA, the regulators, are very, very clear in terms of risk. Yeah. You outsource the service, but you absolutely don't outsource the accountability for delivery. And I guess one of the challenges in our industry is it's highly intermediated. And we're not just talking about outsourcing once down the line, but 2, 3. And given that you are accountable, and particularly now that we've got the senior manager regime in, how do you ensure that your risk appetite matches those that are providing you with services, and you could be quite remote from them? I guess the other point to bear in mind is if you look at our industry in terms of the players, it's a very, very broad church. So we have huge international players, we have those with a EU footprint, and then we've got much smaller players that may be UK focused, and they are all outsourcing to, a handful or so of third parties, and they have very different risk profiles and appetites, and also they have very different in terms of leverage. Depending on which firm you are. And then I guess that also brings into the question about, and certainly something that's playing in the regulator's mind, is concentration risk. And playing into the whole piece and focus on operational resilience.
Yeah, and that was something, Mike, you and I had spoken about, that the difficulty in bringing firms together and their risk appetite or their just disposition to engage in these type of services are different. I think you had an interesting anecdote on the AML side or an initiative you were involved in, Or maybe, sorry, to let yourself introduce yourself as well.
So good morning, thank you, Ronan. So I'm a partner at EY. I've probably spent the last 20 years working with 5 or 6 different utilities within financial services. And I think there is a number of lessons to learn around creating a utility service. And the assumption here is utility service is a standardized service provided to multiple consumers of that service. Same way as Ronan said that you connect to your electricity to the plug in the wall. It's exactly standardized, you know what comes out of it. When it stops, you know what happens, it gets put back on, and you know how all the systems work on it. If you go to another country, you still put the plug in, but it will operate in a slightly different way, so the standard's different. Managed services is a much more bespoke service where it's given to a one-to-one between 2 parties. The challenge with the utility services is that by creating those standards, it's not just the technology and the data, which is obviously areas I care about, it's also assumptions around the risk principles and the risk appetite of all the parties that are involved in that utility. And if you look at the KYC, the AML utilities that have evolved over the last 5 to 6 years post-financial crisis, many of them have struggled, not just in getting the standardized information and being able to use that information, share that amongst parties. Fundamentally, it's the principle, can they share the same risk appetite between all those parties? And from my experience, when you hit that problem, it becomes very difficult for an institution, particularly in the compliance space, to be able to say, my risk appetite, which I have just determined for the jurisdictions, products, to clients that I operate in against my business strategy, that is going to be exactly the same as another party that I'm going to be working with. And if you can't reconcile those, there are 2 sort of fundamental issues that come to that, which is it becomes very difficult to give a standardized service. And you don't get the benefit of the lower unit cost of delivering that service. There's a second question, which is around whether the regulators are comfortable that that utility will actually mitigate the risk that it's intended to provide. If you can't make them comfortable, there's another question, which is if you're trying to reinsure some of that risk that potentially that utility is going to deliver, the reinsurance business or the insurance business isn't going to take on that risk as well. So you have that, to Pauline's point, you still retain the risk within the institution. You can't actually mitigate any of that risk by using that utility service. It becomes really difficult to justify why you go down a utility service.
And Rafael, you and I, we'd spoken about it's interesting. There's an interesting segue there in terms of how you look at the success factors here. So when you engage someone, and how do you define success?
Yeah, well, it's interesting because I think the success factors will differ depending on the use case as well. And if you try to understand what compliance as a service is about by looking at what reg tech firms are out there, you'd be forgiven for thinking that compliance as a service is all about automating regulatory change, right? Because this is really a big focus of the majority of reg tech firms out there. But of course, there are a range of use cases. Data privacy, KYC has been a big topic for a long time. And now know your third party, KYTP, is also becoming very salient, as well as regulatory reporting. And I think some of the in the past, the critical success factors have been thought of in terms of business case, and there was some reticence around, is there a big enough business case for us to actually do this? Very often now, the business case financially works, due to some of the factors that you've mentioned there, Mike. But there are other success factors on which these initiatives stand or fall. One of them is, what does it do for the customer proposition? Right? And I think, Vikram, that you mentioned something along these lines. So we know of a KYC utility that had aligned interests, very large business cases, some institutions looking at $100 million plus business cases, but everyone had forgotten about the customer. And the customer was going to need to be moved to input their data into this utility so that the different institutions could then consume it. But there were no incentives to do that. There were no communications to do that. So the customer didn't allow it to happen, and it failed. I think there's also a business case around, does it deliver the right risk and control outcomes that you needed to? So when we at Accenture operate some of these, we're one of the outsourcing partners. When we operate these, we need to ensure that our financial incentives are aligned with improving, for example, control effectiveness. Is this getting better? Are we getting better at doing this than it was done previously? So I think that alignment of interests and the control outcomes is very important. The technology strategy and technology alignment is I guess, the fourth one. Many of our clients are now they're very reluctant to adopt new systems that require customization. Many customers want to adopt, as they are, platforms as they are, because they're easier to update and to patch. And so for clients of ours that are now thinking about plugging in new compliance as a service types of fintechs, regtechs, or even linking them to our bigger organizations, it's really about, do they interface with our tech strategy? Are they aligned with our technology strategy? So that's kind of a fourth thing to bear in mind. And then the final one, to be candid with you, I think it takes a lot of courage to actually embark on compliance as a service. Our clients very often face quite legitimate questions about letting go of some control around this. So, is the third party going to provide the same level of service that we're used to? Or inversely, are they going to show me up? Why are they doing it so much better than we ever did? Am I going to lose empire and influence? These sorts of questions are all legitimate and have to be worked through. Maybe they need a comms plan tying back to the business plan and some of the other outcomes. But for me, these are some of the success factors to make this work.
And I think that leads also to this point about, so as an asset manager, when you think about this, a very, very fundamental question is, what is the scope of that service? Where does it lie on the spectrum? I mean, is it like something which is a relatively simple outsourcing of vanilla processes?
Yeah.
Or is it on the other end of the spectrum, which is it's more significantly value-added, integrated, strategic partnership in a way that is being looked at between the asset manager and whoever the provider is.
Yeah.
And I think depending on where on that spectrum the service is, I think the risk dimensions change materially.
Yeah.
So to all the points that have been mentioned, I think so that in some ways is a very, very fundamental starting point.
Yeah.
And something which asset managers have to assess. Where are they comfortable with? What is their expectation? What is it that will add value to their business operating models? And therefore decide on a sort of point on that continuum where they wish to
And is that
position.
critical determinant whether this is going to allow you add value to your engagement with the customer? Is that the most critical?
So I think it is a little bit broader than that when it comes to compliance, because I think the customer is not the only stakeholder here.
Yeah.
I think the regulator is a very key stakeholder as well. So, how are we able to meet regulatory expectations is quite key. And I think a lot of the regulatory expectations are also driven not just by what the regulator wants to do, but also what they believe is right for market stability.
Yeah.
So it's about our role as a player in the market and how we are able to contribute to market stability as well. So yes, the customer impact is key, but it's also other stakeholders.
I think there's an interesting point here, which is the perception of risk is different from different stakeholders.
Yep.
And how do you mitigate that risk? And I think particularly in the compliance space, recognising that risk is often a zero-sum game. If you get it wrong, there is a consequence to it. As a technologist, and I'm sure, Rafael, you'll see it in the same way, which is we understand the risk as to how do we manage the technology and the data and the services we provide. I'm not an asset manager. I've never actually worked as a banker, and therefore you will look at your risk in a different way than Rafael and I will look at the risk. I think one of the challenges that we face in the compliance industry is how do we bring a common understanding, a shared understanding of those risks as we try and use technology and data to solve some of these problems for these different stakeholders. And that is a journey we're going on, which certainly as I work in EY as a technologist, I see that within my own organisation, working with my colleagues who've never really used technology to the scale to solve some of these problems. I have to take them on a different journey, and I and myself as a technologist, even though I've worked in this industry for nearly 30 years, I have to work with them to be able to understand what are the risks they are trying to mitigate for their client and the end consumer of those services. Those risks need to be transparent and need to be effectively managed.
And I think you bring up a really important point there around technology skills. I recently saw one of the big financial institutions here have started recruiting or rolling out a Python coding programming language across risk, making it optional, but right across the risk function. And I think that also reflects the shift in regulatory focus, right? So we had a first wave of regulation of capital at the turn of the century, and this was supplemented with a wave of regulation of conduct after the financial crisis. And now what we're seeing is a third wave of regulation of data and technology. And so I think in order to correctly assess regulatory risk, compliance risk, we need to become more and more conversant with data and technology, echoing some of the points that Kay made there and her concluding remarks. The focus around data provenance, data governance, and traceability are going to be really core compliance skills in my view.
They all came up, Pauline, on in terms of the Velocity program at the IA and how the IA is trying to be at the vanguard along with, say, the Bank of England and trying to bring some of the regtechs and fintechs to the fore and help them succeed in this market. But some of the topics that are coming up here, I've heard them discussed at the Velocity program meetings as well, and I'd be interested to hear your thoughts on how, say, Velocity is helping in this regard, or how the IA is helping firms embrace what might be perceived as high-risk vendors. So people, they look at some of these firms that are still going through kind of Series A, B, and C funding. How can people safely engage with a firm at that point in its evolution?
Okay, sure. So for those of you who aren't aware of the Velocity program, it's the FinTech Accelerator, which the Investment Association set up about 18 months ago. And what it recognised, there was lots of great ideas out there, lots around technology, but the aim seemed to be, and the focus seemed to be on the sales side and the banks. And what we very often come across is, although the investment industry has a number of the same challenges as banks and insurance companies, we also have different challenges and we have different nuances to the same issues. So what we wanted to ensure was that our member firms could access this great tech out there, but it could be utilised in a way that actually worked for the industry and addressed the issues, particular issues that we had. So we set up a separate FinTech membership for FinTech firms that were at a particular stage, and we provided them with a platform to explain what their ideas were, but also for the industry to educate them in terms of what our needs were, what specifically pieces that would help with us. We provide a place where they can share ideas. We also provide technical updates, and we've set up an advisory panel which will be able to guide the FinTech membership through particular pieces. So they understand the industry, they understand some of the risks that there are, and understand the challenges and the needs of the industry.
Yeah. I also know, I guess Mike and Rafael, both your firms engage kind of incubator style setups. Do you share similar issues and themes that with Pauline, and as in terms of how the Velocity is operated?
Yeah, so from Accenture's perspective, we facilitate the FinTech Innovation Lab, which is described as a cross between the Apprentice and Dragon's Den for FinTechs and RegTechs. And this is kind of an annual program where FinTechs go through an incubation and coaching period. They're selected by banks, shortlisted by banks, into that incubator. And the idea is that then they have a bit of a bridge to go into what is primarily banks at the moment, but HSBC is a keen participator and has actually taken a stake in a number of these organizations. I think many of these FinTech and RegTech firms would be well advised to look at the buy side and to actually I think they would find them much easier to do business with in many cases. Sometimes the approval process for one particular bank to onboard a FinTech was longer than the FinTech had been in existence. And so it is very hard to do business with them. And so I think that if you did reach out to them and continue this engagement through these sorts of platforms, you'll find it very much worth your while.
We've been in a very privileged position in that we helped the FCA run 2 of their tech sprints last year. And there's some really interesting lessons that came out of that. So we supported on the AML and financial crime tech sprints, the FCA. Out of that came a couple of things. One is recognition, both by the industry and by the RegTechs, that in many cases, and you'll hear Nick talk about this as well, they're resolving a point solution. Which is great because they're bringing real innovations to that particular nuanced problem we're trying to solve. Unfortunately, from an industry perspective, one of the challenges that represents is that actually doesn't solve the problem we're trying to solve from an industry perspective, and actually needs a series of the RegTechs to be able to work together. So out of the tech sprints with the FCA, we set that up with Nick and the team to make sure that people left what I call their coats on the hooks outside the door, and they all came in open, collegiate, and worked together. We specifically structured it so that they would work with the industry amongst the different RegTechs. The really interesting thing that came out of that was that the RegTechs themselves recognized that they need to collaborate with each other. That is hard when your valuation and the purpose of running a FinTech is about creating value for the funders of that or the owners of that business. So there are a couple of things I think are really important that the industry needs to think about that comes out of that. One is that how do we continue to help evolve? And I think what we talked about here is important to create and stimulate and support that collaboration within the ecosystem. I think that there is and I'm a very passionate believer, particularly going back to our utility question, which is around standards. So we as an industry aren't particularly good at working together. Just put that out there, okay? If you look at where there has been success, that is orientated around where there is a common theme or a common problem. So we talked about MiFID I earlier. Turquoise boat, for those of us who are old enough or got less hair who can remember that. That came about as an initiative around data standards, data sharing as a consequence of solving a particular challenge that existed around data within MiFID I. If you look at a more recent example, post the financial crisis, you look at GLIFE. GLIFE, which is the Global Legal Entity Identifier Foundation. That was initially left, like boat and turquoise, to the industry to try and create a solution for legal entity identifiers within the industry. We failed consummately to be able to do that because there wasn't a specific regulatory need to be able to resolve to that. Eventually, after about 4 years, the Financial Stability Board said, right, I've had enough. this needs to happen. We will provide this core funding to create Glyph. So we now have a legal identity foundation which generates a international standard around legal identity identifiers, which resolves down to each business registry in the markets that operate within that. The problem we've got is adoption, which is how do you encourage that? But we have a mechanism for how the industry have come together to collaborate to be able to use that, and that's for non-for-profit. We need to think about within the RegTech and the compliance space, because of the risk of failure, how do we help creating those types of standards and those types of collaboration where the RegTechs can focus together, not as individual firms, on the real problems that we have in the industry that we need to solve to. That, I think, will be a major accelerator within the industry.
That was some interesting points there, because as you're talking, I recognise some of the discussions John Lee and I have had over the years in terms of the genus of what led him to set up CSS, was that he could see these many smaller RegTech firms that on their own didn't have the scale that potentially to exploit the opportunity that was in front of them, but at the same time also recognising that they should be working with each other. So he went out and set it up and brought 3 or 4 of them together to drive that integration at a formal level. And then what's evolved out of that is, what I would call utility-oriented managed services and true managed services, as well as kind of common technology platform that underline all of that. And another interesting point you brought up was this drive towards standard, because I'd actually credit the IA with leading a lot of the standardization improvements that have happened in the last 5-6 years. I feel the IA have been at the vanguard of that. So if you think about the European Working Group was in terms of, say, where Mark is involved with on the, setting up the TPT standards, the EMT standards, EPT standards. That was driven by an initiative that was going on within the IA before it ever surfaced at a European level. And those standards, and that's where the industry came together to set these standards, has then led to the evolution of utility service providers using those standards, and without ever having to formally drive them to, they all interoperate and work with each other today. So it's an interesting that standardization is happening. But it's not maybe happening as I mean, Vikram, it definitely could happen more. We could certainly do it more standardization. It would make things considerably more efficient.
Yes, but I think it is challenging because in many ways the industry has grown and the participants in the industry have grown differently, right? So there are a multitude of platforms out there. There is legacy, and you can't replace legacy overnight. So I think getting to common standards is definitely it is I would say an appropriate objective to work towards, but is not the easiest thing to achieve across a number of these things. I think the other thing which I would, when talking about technology and using whether it is fintech or any other technology sort of platform, I think from an asset manager's perspective, the other very important element is the risk related to cyber and hosting. Okay? And I think we shouldn't sort of underestimate that in today's context.
Yeah.
So if we are looking at a situation where instead of doing it in-house, you're suddenly saying, not suddenly, but you're thinking about putting that sort of business critical and regulatory critical process with somebody outside, I think the whole element of risk that is there with respect to hosting something in the cloud, what controls you need to have around that, what controls need to exist in terms of flow of data, become even more critical. And it's something which fundamentally would impact any compliance as a service solution.
And the chain of oversight, we work with large global managers. They work with us in terms of we have some of their infrastructure hosted in our infrastructure. We work with third parties. That oversight has to carry through at the same level. So the same oversight that the asset management firm has with us, I need to have with my service provider. That chain is super, because the chain is only as strong as its weakest point.
And I guess just maybe something to mention is the initiative from the FCA on open finance. So moving from open banking to a lot more products, a lot more services, and what will that look like? And that raises lots of opportunities, clearly, as the regulator identify, but also a number of risks in terms of cyber, in terms of hosting, concentration of data. And so that's going to be very interesting how that pans out in the compliance world.
I think that it's a given fact, one of our material risks that we will face increasingly, and there is no avoiding it, is cyber. So whether you hold the data within the premises of your organisation, your own data sets, or they're in cloud, those risks will exist. Two questions for people to think about, and this goes back to, again, it's around where interpretation and understanding of where the risk lies. So from a cloud perspective, it's about, yes, the materiality, if there's a security risk, is material if that's breached. But the speed in which you respond and the fact that the coverage that you get, being able to resolve that cyber breach, is something that is all of the parties are involved in that. That becomes much more challenging, and if you think about what the FCA is doing around operational resilience, where you have to Vikram's point, where the industry has evolved up and there's a very high level of heterogeneous systems and data and policies within organisations, that becomes a much more difficult, to monitor whether you've had a breach and how you respond at speed to be able to patch that breach. So the risks are there, they're given, they will always mature and they will also evolve. It's how we can respond to evolve with that and be able to respond at speed to be able to address where those risks exist.
So our time is up, but there's one thing I'd love to ask everyone as their parting shot. The compliance office of the future, what should we expect?
Well, that's a very good question. I mean, I think the problem that compliance faces now is that the number of risks, you mentioned cyber, there's climate. I think we can add epidemics to the list of risks, around the horizon, quantum computing and so forth. And you can't just keep adding to the stack of risks and add people and systems to that in the compliance space. So what that means is that the better known risks, I think, you need to be able to automate out or to outsource. I mean, my own view, and might sound a little bit provocative today, but I think it'll be completely banal in a couple of years' time, is that risk and compliance professionals shouldn't really be working as BAU on anything that's well understood. So risk and compliance professionals should be trying to understand what's around the corner, what are the emerging risks, setting standards, setting policy. There needs to be a kind of perpetual automation capability, which is taking some of those new controls and automating them and embedding them in the organization. And then for the risks that are now well understood, KYC, I dare say market risk, dare say credit risk, these are things that you can plug into the ecosystem to do for you. And I think that's how you get a kind of value accretive compliance function in the future.
I guess that's why the skill set, sorry, Vikram.
Absolutely. And I mean, I would sort of echo that in the sense that I think compliance sort of has two hats in some ways as we look ahead. I think one is sort of the control element of it, which is more, to Rafael's point, the aspects that are already known, embedded, and which just need to be monitored and managed. And that's a capability which ideally you would look at somebody to support the organization with and deliver that in a robust, efficient manner. And the other one is the business enabler hat, which is how are we thinking about new things? How are we thinking about new products? How are we thinking about new markets and geographies and services? What risk does that present to the business? How do we address those? What are the emerging risks?
Yeah.
So I think that is the second hat, and I think that is really the one which adds material value to the business in terms of how the business evolves. So I think the compliance sort of, you would say, compliance office is got these two elements. One which is relatively more as an engine, automated, working well, and the other one which is where a lot of the, I would say, intellectual cerebral work is happening.
Yeah. And I'm seeing, like, as I speak to CCOs on both sides of the ocean, I get a sense that the skill set and the demand for different skill sets has changed dramatically. So, heretofore maybe there was a heavy reliance on people with a legal background or a fund accounting background. some sort of an audit type background. And now more and more you're seeing data scientists, robotic process automation specialists, people with deep, what I would call...
And I think that's the challenge actually, is those people are wanted across the board outside financial services, never mind within investment management. And there's a real question around the talent pool and attracting them to the industry. There's also a piece which we've identified is, given that the relentless pace of regulation, most firms, regardless of size, have quite a big compliance function. They are relatively well remunerated. They are quite senior people. And what's interesting is, eventually they will retire. And so how do you attract the people that are coming through from school, from university, to attract them to that function? Because immediately within an investment management firm, given their options and given the skills that we're asking from them, that isn't their first choice. And I think getting that talent pool through is going to be quite a big ask.
I think that's a really important point. We're at a point where, if you take those two functions, in what we do as a BAU, how do we automate that? It's the same challenge we had with, or the transition in the market around flow business and equities, flow business in fixed income. We're at that same point. In the emerging threats and opportunities, there are whole new things, whether it's climate change, sustainability, sustainable finance, cyber threats. There are a whole set of new skills we need to evolve. That transition period where we rely on people going through the business who understand the business, understand how the business operates and control it, we cannot operate on that way going forward. That's not the way we can develop people to be able to fulfill the compliance function. So I think, to the question, we have to think very differently about what the compliance function and how we'll operate to address those two skills, but to address that transition risk, because we will have a material gap in the skills and the people we need to be able to support both those functions in the compliance office going in now.
Excellent. So before we break for some coffee and treats outside, are there any questions for our panelists?
Still in silence.
Well, with that, it can't keep a crowd from a coffee, So with that, thank you very much. I really appreciated your comments and thoughts today, as I'm sure everyone here did as well. Thank you.
Thank you.
Thank you.
Thank you very much.